Adobe ticker symbol ADBE is down 34% in the past year and down in the past 5 years 17.6%. This puts the company at a forward PE of 16. In this video, we're going to see if it is now a huge opportunity to invest in Adobe by looking at the financials, the forecast, some very important statistics, using my intrinsic value calculator to calculate the intrinsic value of the company, as well as revealing whether or not I am adding it to the YouTube stock portfolio. Starting with a little overview, Adobe's analysts have a price target of $490 per share, which is a 34% upside. And the market cap of this company is $154 billion. And starting with the financials, we're going to see that they are amazing. First of all, revenue has grown consistently over the past 5 years at around 10% per year, and it is currently at $22 billion. Then, if we take a look at their profit, net income has also grown pretty consistently, and it is now at $6.8 billion. However, free cash flow is even better and has grown even more, and it is now at $9 billion. Another thing that I love about the company's financials is the number of shares outstanding. As you can see, they have been buying back shares pretty heavily over the past years, at around 2 or 3% every year. This is very good for investors. As you own more of the company, Adobe's fundamentals and financials are expected to keep growing very steadily, with revenue growing from $24 billion to $28 billion in 3 years, which again is around 10% increase, and their EPS from $21 per share to $26. So again, very solid growth expected. Then, in order to calculate Adobe's intrinsic value, I use my Google Sheet, which tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. As a long-term value investor, I did a 7-year analysis with low, middle, and high assumptions. As you can see, the intrinsic value for Adobe, according to my low assumptions, is $326 per share, middle $459 per share, and high $632 per share. This also means that if the low assumptions occur, you're going to make an 8.05% annual return on your money, middle 14.3%, and high 20.3%. So as you can see, this is the main reason why I'm interested in Adobe, because the valuation looks very attractive for such a good company with such strong fundamentals. These returns are pretty good, as the market average return is between 8 and 9%. So you should be able to beat the market if these assumptions occur. You can let me know what you think about my assumptions, but I think they are pretty reasonable. And one thing that I want to show you is the number of shares outstanding, because I put a 0%, but as we saw before, they are buying back at around 2% of their shares every year. So as you can see, what this does to the intrinsic value is that it is now even higher, and it is now a buy according even to my low assumptions, as you would get a 10.4 annual return on your money. So if they keep buying back shares, this stock looks very attractive. And you can get access to this spreadsheet below. It is very easy to use, as all the calculations are done here. So the only thing you need to do is move these numbers around. Now, the spreadsheet does not take into account the balance sheet, but as we're going to see, they have an amazing balance sheet with $5.7 billion in cash and $6 billion in debt. So this is basically no debt for a company that has a market cap of $154 billion. So basically a perfect balance sheet. Then the valuation ratios look very good, with the PE ratio of 23 and a forward PE of 16, and the current price to free cash flow is 16, which is very good for a company this good, with such strong fundamentals and with still a lot of growth potential. In terms of the valuation history, if we take a look at the price to free cash flow, it is trading at the lowest it has been over the past 5 years, as it used to be 40, 20, 40, and it is now trading at a price to free cash flow of 16. So again, according to history, very good. Finally, am I gonna add it to the YouTube stock portfolio? And the answer is yes. I believe Adobe stock has amazing fundamentals and is trading below intrinsic value. As you can see, I've done the same with all 4 companies here. The best one performing so far is SoFi. with a return of 195%. If you found this video valuable, let me know what you think about Adobe stock in the comments, and I'll see you in the next one.